but the sector in focus today is the auto space, and the stock in particular is Hyundai Motors, after they've made a proposal to buy goods and services from related companies in excess of 31,000 crore rupees for the next financial year. It's divided leading proxy advisory firms. So to discuss this and more in detail, we're joined by Shriram Subramanian, who's the founder and managing director of InGovern Research. Shriram, the divide is pretty clear. On the one hand, it's a related party transaction done at an arm's length of 32,000 odd crore rupees. On the other, it is that, okay, it's an Indian arm of a Korean company. So what's wrong in taking benefits from, the back-end things that the Korean parent has to provide? So in light of both these sides, the question is, where do you stand and what is it that you are recommending shareholders do?
Good morning. I don't think Hyundai, it is natural for auto companies to source components or parts from various subsidiaries or where they have tie-ups or joint ventures and source various aspects of the car from various entities. Amongst these seven, one of them relates to sourcing components from Hyundai Motor Corporation, Korea itself. One relates to sourcing from Kia itself, which is owned partly by Hyundai Korea. But the more important one, which is the first one, which is Mobis India, the one that has concerns. In that sense, why is Hyundai India sourcing from Mobis India, which is an Indian company, and that too they are sourcing tools and machinery. They are not sourcing components. They are sourcing tools and machinery from an Indian entity. So to that extent, there will be concerns in terms of whether the pricing is in line with market or because that is the Hyundai India is the only client of Mobis India. So to that extent, there are concerns. I don't think the company itself had wanted to explicitly have these or there are abusive related party transactions, but the company could have gone out and reached out to shareholders, put more information out there as to why it is compelling to source 12,000 crores worth of capital goods from Mobis India. I think that becomes a big concern. Though I think the company is not abusing, but at the end of the day, they are new to the market. So we can sort of say that probably over a period of time, they will realize that they have to outreach to shareholders. Also to be noted is these 7 resolutions are all ordinary resolutions, which needs only the 51% shareholding to vote. And Hyundai as a parent has 82% shareholding, and these 7 resolutions will easily get passed because of Hyundai as a parent voting for these resolutions. But be that as it may be, the company needs to outreach to shareholders, outreach to proxy advisory firms, and try to address these concerns, because going forward, investors will keep remembering these.
Okay, all right. Hi, Mr. Subramanian, and thanks a lot for joining in. So as you're saying that the resolution will get passed, but the point is it could have been done in a better manner. Could have consulted shareholders first and gained their confidence as well. Now, out of these 7 points, how many of them pass muster with you?
I think all of them pass muster, but we have this one called 4-star, where Mobis, especially the transaction with Mobis, which is
first one.
The first one. That is a big concern, because why are you sourcing capital goods from an Indian entity is not clearly explained. There's no logic for that.
So what next? Because you said these will pass. So, I mean, whatever proxy advisory firms say does not, in that sense, matter largely because, you need just 51%. So what would your stand on this be?
No, I think investors have a long memory. There will come a time in future where, if the company is arrogant and continues to not share information, there will come a time when they will need support of shareholders, and when shareholders lose trust, the resolutions will not get passed sometime in future.
Right, but whatever little listing history that Hyundai has had from the red herring prospectus, etc. as well, all of that has been filed with the exchanges and the regulators. There doesn't seem to be any glaring corporate governance issue with the company, right? So this may well, like you said, be an honest mistake or something that they will learn in their journey of being a listed company. So then does that mean that shareholders should ignore this, or, for instance, not give it as much concern as is being given right now?
Yeah, you have a valid point. One can pardon the company for its ignorance, so to say. But shareholders need to raise it at the as part of this postal ballot, right, to the company, or at least the institutional shareholders need to raise it in broker conferences or whenever they engage with the company. Otherwise, what is the compelling reason is not understood by shareholders.
All right, we take that point. Thank you so much for explaining this to us. So the stock is lower by about 1.5%, but like you said, not a big glaring concern, but something that the company needs to address. Had it been a glaring concern, I'm sure the market would have reacted a lot more aggressively than what it is reacting right now. Shriram Subramanian, thank you so much for joining in and giving us your valuable insights into this itself. With that,